Alright guys, welcome to video number 10. It is the second to last video of this entire module, and we are going to be going over the application of these strategies as well as, the risk, besides the inherent risk of them, but just kind of a risk to reward on a charting standpoint and when to execute, right? So this kind of is a little bit of a crossover from case studies, so go ahead and check out that entire separate module besides this option module. But essentially, we are going to go over a trade that I've made, like against, essentially, not to stutter, but it's essentially just like what I've been doing, right? And how I've been putting on these trades, right? So for instance, let's go to the current trade that I put on PayPal just the other day. So I'm long-term bullish, I would say, on PayPal. I really like what they're doing. They're going to be buying back shares. They're going to be integrating with a couple more payment platforms or payment processing platforms. And honestly, I kind of see them being a staple still in the industry. If we pull up the basic PE of PayPal, it's actually at an all-time low, which is actually kind of crazy. And I think there could be a lot of growth to the upside of this company, right? So let's talk about what I went with doing here, right? So I see on a daily perspective, yes, we've come all the way down from all-time highs. We put in a solid base here as well as at about $55. And right now we kind of are just pulled back from this run, right? So I went ahead and I drew a Fibonacci extension, which is this here. Drew it to the swing low, swing high. And I see that we're kind of just in the middle of the range, right? Now, I understand that earnings might be a potential catalyst in the future, so I might want to maybe try to get a sign on the stock before that. But in my personal opinion, I don't see a pressing reason why I need to buy calls or buy shares immediately, right? We're just kind of ranging still. So I kind of opted to go ahead and sell puts to get into the stock at $66, right? So it's essentially saying, okay, I'm going to get paid to enter the stock at $66, which honestly I find is a pretty logical place to want to buy the stock, right? I mean, it's right around here. If we dip a little bit, I'll be in. If not, it's fine. I received a premium of $134 to put on this trade, and honestly, I think it was a solid no-brainer. Again, like, you guys typically see this in the Discord itself, but when I'm walking through this, I went to sell put, and I like to go about 30 to 37 days out. I opted with 30, and I simply sold the option that gave me a 30 delta for puts, so I made sure to go in. The bid ask is very tight, right? So I like that. I understand what I'm getting into with their delta, which is the percent chance that it'll be in the money, as well as the theta, that's solid decay. And honestly, I thought I was being compensated very, very well. If you go $145 for putting up 6,600, that's a 2% return on a solid financial company. So I was like, why not? But honestly, you're going to see a lot more than just this quick little, video on a trade that I did. I'm usually always trading each week, or at least making a portfolio update within the Discord, so you'll be able to see exactly what I'm buying there. But we'll go into the next video very soon, but this is going to be a little bit about rolling. I want to really focus on rolling options, and that is probably going to be it for the module. So I will see you guys in the next video. We're going to talk about rolling and position sizing.